Mr. Girard, welcome again to the conference. In a few seconds, we're going to talk about our topics. I hope I will be hearing you. We've having some technical issues before starting, so let's hope for the best. Everything was going so well for Quebec when COVID hit. You were on track with a good fiscal results for the past 2 years. Your overarching goal was to bridge the gap, the wealth gap with Ontario, and then suddenly Quebec became the most hit province during COVID. A few months ago, you gave us some idea of what the year was going to look like from a budget perspective. You said, we would have a budget deficit of $14.9 billion, and you predicted that the growth contraction would be about 6.5%. Now we're in a second wave with new measures that are being implemented. Can you give us an update a little bit of where the Quebec economy is going? Are you still around that 6.5% contraction?
Yes. So we in June we a portrait or an update, and we forecasted the 6.5% decline for GDP and a $15 billion Canadian dollar deficit, which amounts to 3.5% of GDP. These numbers are still broadly in line. We will come up with a fall update sometimes later in the fall. The date is not announced yet, but these numbers are still ballpark in the right area code or zip code, as American would say. These numbers are still reflecting the current situation.
And you had set aside about $4 billion for, a second wave, which we're now seeing. Is that also? Do you think that's going to be the ballpark also for that?
Yes. So this we've already used $2 billion, and that's public for municipalities and public transit. And it's very important. These municipalities are an area of government that is very close to citizen, and they do make a difference. And so this $2 billion is funded half by the federal government and half by us, and it will make a difference. And I'd like to come back to your initial statement or initial question. It's perfectly true that in the beginning, we entered this crisis from a position of strength. We just came from 3 years of above trend growth, full employment, 2 years in a row outperforming the rest of Canada, and our public finance were in excellent position. So this is helping us weathering the storm and making a difference for our citizen and our corporation.
So you have a plan to go back to a balanced budget, and you've said within 5 years. I just want to see, with this second wave, you're doing the best you can to help companies, but some are going to drop out of the game. We're going to see some closures. We've seen some closures. Do you think that within that context, you're going to have sufficient enough growth to sort of get the tax receipts and bring that budget in balance within 5 years?
Yeah, there's a lot in your question, and the first of all, so we closed 40% of the economy in March and April, and then we reopened in May, and the reopening phase went really well. Our unemployment rate is we've recuperated 95% of the job level that we had in February, and so this phase of what we call the period following the confinement, I don't know if deconfinement is the right word, but this phase went really well. Now what happened is we had a good summer, and we had a number of cases that was around 25 per million around August 25th. And suddenly, very quickly in September, the number of cases started doubling every 14 days. So we went to 50 per million, 100 per million. And when we were early October, around 125 per million, we decided to ask citizens to reduce social contacts and come with very limited closing of businesses where people were gathering in order to stop this increase every 14 days. And so far, so good. There's still a lot of work to do. We've asked citizens to do extra effort until October 28th. But we had to act in order to stop this doubling of cases, which was going really fast. So with respect to the 5-year plan, it's very important to have a credible plan that is transparent and that will be understood by everybody. So our role is to show the path toward equilibrium. And so 2020 is a year of minus 6.5%. 2021, there will be a bounce. But starting 2022, 23, 24, 26, we need to go back to increasing the potential of the economy. And so through increased growth, what we were doing prior to the crisis, catching up the lost growth of 2020, 2021. More growth. We also are asking the federal government for more healthcare transfer. It's very important. And finally, by aligning expenses with revenue growth is going to be in the neighborhood of 4%. If we maintain 3.5% expense growth, we will be able to come back to equilibrium within 5 years.
And just for our public, equilibrium in Quebec understanding means after the payments to the Generations Fund, right?
Exactly. So it means that we would have started reducing our debt level again.
So just to go back to the Generations Fund, it's interesting because at the time of the budget, you were already starting some reflection on, the pace of debt reduction. Of course, you had hit the target early. Now we're in a completely different situation. And you've mentioned that you actually would like to, maybe you will have no choice but to rethink the debt path. What can you tell us about your reflection on the Generations Fund and on the debt target reduction, the pace?
Okay, well, the Generation Fund is here to stay. And what I've said is it's important to remind everybody that from an accounting point of view, budget balance is before a contribution to the Generation Fund. And according to the deficit reduction or the debt management law that we have in Quebec, we are reporting after contributing to the Generation Fund. But that doesn't change accounting standard. Accounting standards or public account standard would be before contributing to the Generation Fund. So the Generation Fund is here to stay. It's an important aspect of our debt reduction plan. We used to be the province that was the most indebted. We are now slightly better than Ontario, better than Newfoundland, and we want to keep improving. And it's really important from a generation point of view. Reducing debt is helping us planning for the long term. It's going to help us fight climate change, ensure public services in education and healthcare. And it's really about long-term equity for future generation. So we intend to resume reducing debt following the difficult period that we're all facing.
Starting when then? How does that change your plan, which was calling for a number by 2026? I believe 45% of GDP.
Yeah, well, with what's going to happen today, we've said in June that we will hit a gross debt level around 50% of GDP on March 31st, 2021. So from there, we need to first reach equilibrium, and then we will reduce debt again. So what I've said is that we had set a goal of 43% in 2025-26, and I've been really transparent and honest. It's going to be difficult to reach that 43% in 2025-26. So in the next budget, when we give the 5-year plan, we will show where we are and what we can do in terms of achieving new targets.
And is there any chance, when you came to power early on, you used some of the Generations Fund money to sort of buy back some debt? are you planning to do anything with the fund to sort of take advantage of interest rates? Is there any plan like this in the works?
At this point, no. But we have an excellent debt management team. We're always looking at options, but the cost benefit of paying down debt when our average funding cost is around 1.5% is less solid. So at this point, no.
So you were talking about towns earlier, and the help you're giving. We know Montreal has been asking. The mayor was speaking just recently, asking for more help for the city center. Are you planning to do more to start with, and otherwise? And what's the risk for your public finance? I mean, everything's going to start adding up.
Yeah, well, everything that we do, we always do it with efficiency in mind, because we have long-term goals to increase the potential GDP, to have our corporation to be more productive, to increase the labor supply. So we try to do our short-term intervention. We try our short-term intervention to be coherent with our long-term goal of increasing productivity and potential GDP. So we always keep that in mind. We live a pandemic, an economic crisis, and therefore we need to be there for our citizen and our corporation. So yes, it's quite possible that we need to do more. The federal government just announced last Friday that they're going to be doing more. We are talking to them. We're in constant communication with the federal government. It's really what we have to do. There's a crisis, and we need to support people.
But do you think? I mean, one of the options that was presented in a report from Montreal a few months ago was to let the city sell some bonds, for instance, to finance its deficit. Something that it cannot do at the moment. Is that something you're considering?
Well, I think these options were being circulated before we announced the $2.3 billion support for municipalities and public transit. So I'll let them manage their public finance and do their announcement. But the support that we've announced, obviously, there's very important sums for Montreal in there.
Okay, so it's not something on your radar in terms of changing the rules?
Well, they would have to make an official request for this, and it would go through the Ministry of Municipal Affairs. But again, these talks were preceding our announcement for $2.3 billion aid.
And speaking of Montreal, so I was looking recently at the number of new condos that are being listed on the island, and there's been a surprising increase, especially after the past few months or even years, of a decreasing this very, very tight market. Obviously, one of the movements behind that is the very weak immigration compared with past standards. Can you give us a little update on how your government views immigration? Because at some point there were questions about, having tighter quotas to make sure everybody in Quebec finds a job. Where do we stand on that?
Well, first of all, I do want to say what everybody knows is that immigration has a very important contribution to the Quebec society and the economy. So we're very much in favor of immigration. We have a particular situation where our common language is French, and we're 8.5 million people in a sea of 500 million people. And therefore, we want to improve integration, and we want to be able to make sure that newcomers integrate into society and have the opportunity. Basically, we want to take the French course to them rather than wait for them to go and spend some very important time for them learning French. So what we did is we went from 52,000 immigrants per year to 40 the first year, but already we are in the process of increasing to 44, 48, and going back to 52. So we had an adjustment to make in order to help people integrate with the society. That's already in the process, and immigration will be part will be a very good contributor for future years for Quebec.
Are you keeping an eye on this phenomenon I was mentioning of, a very fast increase in condo listing? I mean, is there anything on the Montreal, in particular, real estate market that is of concern to you?
Well, what's a concern to me is the number one concern is the pandemic. We need a sanitary situation or a health situation that improves to help the economy. The second thing is we are facing a world recession. And right now, there's a lot of activity in real estate overall, and house prices are going up, and demand is strong, and we're seeing this all over the province. And yes, there is a supply of condo in Montreal, but I would say, with respect to real estate, we're going to need more time to really assess what's happening in this market. Because the market, when you look at the aggregate numbers, appears to be way too strong for the fundamental. But you're only looking at current data while we were closed in March and April and part of May. So I think with respect to real estate, the best thing to do is let some time go by and analyze the data with respect to what happened during the period when we were closed, what happened after, where are we? The real estate market is not a market that we should look at like Google activity index.
Minister, you said, you must be talking to companies all the time, and including in your district. There's a lot of discouragement and fears and concerns from restaurant owners and other companies that had to close again. I know you've given them some support, announced some support, but I mean, how are they? How are you going to do to avoid so many closures coming up and to help close that gap? I'm going back to my first question on how you can go back to sort of pre-pandemic growth level by 2022.
I think when you look at a small business, there are two main fixed costs: is rent and HR, and we've addressed both. The federal government is subsidizing 75% of the payroll, and for the employees that have been temporarily laid off, there is some support with the CERB and the unemployment insurance. And with respect to rent, we were subsidizing up to 75% of rent, and this program expired at the end of September. And now, following many discussions with the federal government, there's going to be a new program that will account fixed costs. So if you assume rent and HR costs, or a significant portion of rent and HR costs for these businesses, most of these businesses will make it through. And also some of these businesses are still operating and selling through takeouts, and the summer was decent for many of them. So it's a very difficult period. It's difficult for everybody, but the supporting fixed costs is helping them being on pause, and will help us ensure that they will be there when we come through more normal times.
You mentioned the federal government several times. How much have you gotten total from the federal government so far?
Well, we are 23% of the population of Canada and 20% of the economy. So once the federal government release their total numbers, we will be 1/5 of these numbers, except for the revenue decline. But if you assume that the salary subsidies and the income support for individual is going to total close to $200 billion, we would be anywhere between 20 to 25% of this.
And you've been pretty positive, I think, about all the measures the government have taken, the federal government.
Again, we're living through a pandemic, to the worst global recession since the Second World War. We need to help, and these programs have been helpful. It has allowed us to concentrate on what is the number one responsibilities of a province, which is healthcare. Healthcare is a provincial responsibilities. This is the heart of the crisis. We're spending. We're going to have increase in healthcare costs this year that are going to exceed 10%. We're going to spend many $billions more for fighting the pandemic. And so while we concentrate on this, and we're also supporting our people and our businesses, but the macro support that the federal government has provided for individual and businesses is welcome.